pretty much the market's picture that we saw yesterday with the overall NSE All-Share Index up 0.4%. The direction for these markets have to a large extent been dictated by the banking sector and the sentiment yesterday more positive than anything else. What's your view on the banking sector right now?
I think the banking sector is on a rally right now. They've shown very strong performance during the year 2011, though a couple of them posted losses, but a great many other banks posted very huge profits. So I think that the market capitalization for most banks will be on the uptick for the rest of the year. So I see positive development for banks in Nigeria.
Very interesting, though, the kind of activity we're seeing centered around the banking arena, because as I was saying earlier, we had Access Bank gaining maximum points by the close of yesterday's trading session, and many traders out there saying that it stands at risk today of speculative trade pulling things back. So what does that say about the broader sentiment around banks and ability to sustain any gains that we do see filter through?
I think that the banks actually will sustain their performance currently, because their first quarter performance has shown that there's an improvement on last year's performance ended December 31st, 2011. So apart from Access Bank, Diamond Bank, Zenith Bank, GT Bank, and First Bank has shown very strong performances for the first quarter 2012. So I think it will be sustained during the next quarter.
To what extent has company earnings reports been stealing your attention? Yesterday, the big one was Dangote Cement, and it announced profit or pre-tax profit up to 118.2 billion rand. The market reacted positively to those results. Your impressions of the numbers?
Yeah, very, very impressed. I think first of all, I think it's very impressive what Dangote Cement has done. But if you look at their 2010 results and 2011, you find that it's almost the same. For cement industry in Nigeria, I think there is serious under capacity, because they are not able to meet the market demands. So you find that the sales or the volumes remain the same year in, year out, and the prices are relatively the same. So I think they will sustain it, because the demand is huge and the supply is short. They will continue to do very well. So I think it's a very strong showing by Dangote Cement.
I think more so than the numbers, the market certainly impressed by the proposed final dividend of £1.25 and then the bonus share issue as well. So let's put that corporate action in the spotlight. And what kind of exposure you've got to the cement industry right now, Jude?
Well, I think a lot of Dangote specifically actually at some point moved part of their borrowings abroad. They took some external borrowings. They liquidated their Nigerian borrowings. So as a matter of fact, most banks in Nigeria currently are not heavily exposed to Dangote Cement, because they have some international borrowings going on. But we still have very little exposure to Dangote Cement in Diamond Bank.
Well, let's leave it there. Jude, thanks so much for your time today.